Okay, the S&P 500, the Nasdaq 100. We're going to be going over some charts. I'm going to be doing a lot of breakdown of what's happening with Powell, going over a few different articles and giving you a visual, or at least my expectation of what's going to happen going into the beginning of this coming year. Basically, the next month, few weeks, give or take, okay? If you tune in every single day, it's more about day trading, short-term, in, out, things along those lines, trades, and things like that. So hopefully this gives you a better visual on my mentality, what I'm expecting, what I'm looking at, okay? Now, the first thing I do want to is going over some of these indexes. Now, first, obviously, the Nasdaq, I believe it's carried us for the majority of the year. Heavy tech names, the big boys, if you will. And just showing you some of the visuals of what's happening here. You had the nice bull flag that kind of played out from essentially July into October, beginning of November. You broke out. You can see the massive double top that we had back here early February 2022. You mounted that level, and you basically just ended up running. Like, perfect mount, as you can zoom in and see here. Broke, kept going, right? Now, you can go into something like SPY, go into Qs, and really look what's happening here as well. I just posted this on Twitter, so you can go check this out. But I mean, giving you like a visual, like the key level there, you got rejected, makes sense, right? When we have targets, when we have levels, you don't expect us to just go straight through them. At least I don't, right? That's why I have a price target. That's why I expect us to go to this level. I expect us to slow down when we hit that level, right? Like, I don't expect us to hit all-time highs and just go straight through it. That'd be wild. It'd be really strong, but it would also give us a lot of illiquidity maybe to the downside, okay? So this is more of the weekly chart sheet to give you a visual, because I just want to be able to put in perspective of everything. I'm sorry, I got Truth blasting out and then chipmunks in the background, but that's where you're at right now, okay? And so you go over to QQQ, and again, you lean towards the Nasdaq, and I look at this, and I'm like, I still think Nasdaq is doing a lot of the heavy lifting here, right? The bull flag, the breakup, key level, you're testing it, but you kind of closed above it, all-time high, like, you know, $3 away here. It's hard to not be excited. Okay, so those are your two main ones. Okay, and then you lean into something like IWM. And actually, before we go to IWM, Dow, right? Dow's already at all-time highs, just to let you know. You broke above, you're doing your thing. Crazy, crazy strong. Okay, IWM. I think IWM has been a very big indicator as well over the year, right? We're going to talk about other indicators, but you know, you look at IWM, I think every time we've had this nice break above the 200, nice, you know, strong, powerful move back to the top of the range over the past year, which has basically been, you know, going back to early, you know, 2022, you know, this 162 to highs of around 200. You know, it's you know, we love talking about boxes that you traded in ranges, and that's what you traded in. Now, the question here is, can IWM finally get the breakout? The last time we saw a big breakout on IWM, you know, unfortunately, if you're a small cap trader, was back in 2020, 2021. So you haven't seen any real big breakout there, and you saw a lot of stagnation from like 2021 for that whole year, basically, right? And so that's kind of where we're at. So you start to get over these levels. You like the potential for these runs. You like where you could start going quick. And in my opinion, if you break above 200 and you hold above it, I mean, you're pushing quickly into like this 208 range, in my opinion. I think you have a little bit of like a supply level there, but I think you'd bump it up. The supply would technically come down to 205, but I think you'll come into 207, 208. So you have more room there on IWM. And to give you an idea, this, you know, big move that we just had to the upside off of, you know, the Fed meeting, rate decision, was about $8 point move up, right? And granted, that was very volatile, instantaneous, which you don't typically get those on IWM, but still, you got it. Okay, so that's that. Right, and I want to jump into what Powell is talking about here, and I want to talk about what you're seeing on the internet, right? Other opinions you may be kind of dealing with or trying to understand, right? But before we get into that, I ask you to do two things: consider liking and subscribing, helps out tons. I don't usually make videos on Sunday, but I thought this Sunday I would. Monday through Friday, I always make videos on the market, what I'm looking at, how I'm attacking the market, what I'm looking at as far as opportunity, stocks, cloud, chips, any type of tech, whatever I see opportunity, I try to give you guys hopefully some type of edge in trading. Also, too, the Twitter link is down below as well, where I post charts all day long, Monday through Friday as well. Weekends, again, typically get less and less activity from me because, again, you can't trade on the weekends. Spoiler alert. So, yeah, check that out. The Discord link, also, if you read the newsletter, you might have got a little taste of something, but there's probably no spots available right now. You can check down below. But, yeah, so let's jump back into it. So, again, today's video is not going to be heavy on TA or heavy on stocks I'm loving, right? Monday through Friday, I have the opportunity to do that. But what I do want to say is when we're looking at the rate cuts and the opportunity, I think that was the big news. That's why we started pushing back into these all-time highs, right? Or we at least got that fuel to get there, right, over the past week. a lot of people think there's basically two sides of this. People that think rate cuts are very bullish, people that think rate cuts are very, very bad. And if you look at history, right, we look statistically at history, when we've had rate cuts, right, or the first rate cut, if you will, the first cycle of the rate cut, we've typically seen the market pull back, right? We've seen the SPY pull back. Now, this is my one thing that I want everyone to understand, okay? And people are comparing right now to 2007, 2008. And I think that's very important to look at past cases, what's happened before. I think it can foreshadow things to come. But what I want you to actively to be thinking about is, have we ever had a situation what we have right now? Have we ever had a situation in which, the market shut down for an entire year, basically, where no one could leave their home or no one could go to work? Has the market ever evolved, per se, to where 50% of jobs are now done at home, right? Has the market ever had a point in which we basically sat at zero with the Fed Fund futures, right, for over a year? Has the market also ever raised rates almost 10, 12 consecutive times? A few of those times, 3 or 4 of them being 75 basis point hikes back to back to back to back. So those are all things you have to take into account. So I definitely think no one really knows how this cut's going to go. I'm not going to be the person that's going to predict how it's going to go. But I wouldn't necessarily count on it being exactly like it was in 2007 or a previous time. I'm going to say that right now. Also, too, spending as far as, B2B, as far as loans, that side of it, even home buying has slowed drastically. So when rates do get cut, I anticipate there to be an initial surge, initial little bit of hype, FOMO, potentially. I don't think it's going to be as bad as everyone thinks. It's my first thing there. It's also important to know that I don't think rate cuts happen until the earliest. The earliest I think they can happen is summer 2024. Before that, I think something bad would have to happen to the economy, which would be probably like bearish for the overall market. So I just don't think that will happen. I've kind of stood by that. That's my visual there. Now, you're also coming to this point of unemployment and what's happening there as well. Everything that the Fed has said that they want to happen over the past 6 months, at least, is happening. So this is why the market is continuing to move. If, the Fed comes out and says they want, unemployment to stay relatively low now, people in the beginning, yes, they wanted unemployment to rise. It didn't. Now they're saying it's, the path of the soft landing. And again, as stupid as some of these things may sound, or maybe you don't want to agree with them, which sometimes I don't agree with what they say, the market doesn't care about your feelings or my feelings. So that's where we need to stay there. So I just want to understand that I want to make sure you understand that viewpoint of it. Okay. Again, very, very, very important too that we all understand that Powell made his first statement too regarding rate cuts. Pretty interesting. I didn't expect him to say it. He does, they said they see 3 in 2024. Crazy. It is important to know that Fed Williams, he left the Fed basically. Was it him or Bullard? I don't know which one it was. Anyways, one of them went and they started working in the White House now. But it's important to get both sides of it. And I want to make sure that we're not just completely euphoric, right? And it's basically siding with what I said. We aren't looking at cutting rates right now by any means. They still say the 2% target's there, although Powell did kind of put some wiggle room in there at this last meeting for the first time ever. But that's very important to understand. Okay, very, very important. So we understand that there. Their rate cuts, next 2-3 months, not happening 99% of the time. Now, before I go to anything else as well, I do want to talk about what's happening with volume. We saw volume basically over the past, we've seen a little bit of a bounce in volume in December, a few hiccup days of decent volume, but volume's been pretty lackluster. This is SPY, right? November, pretty low, little hiccup, 97 million there in the 14th, but nothing crazy. From lows, we saw some volume kick in, which you expect. At lows, you expect buyers to step in, right? When you're getting a reversal, you expect to see higher volume. And we did get that. But at lows, 413, 416, you pumped up. And then when you broke out above that next key level, you get another big spike of volume. And you're kind of getting that now here at highs. This is your best volume. Some of the best volume you've seen almost all year, okay? But I'm going to tell you, when we look at the calendar, just to be clear, okay, this is where we're at. This is our week. Christmas is right here. I anticipate this week we're going to get some initial surge in volume probably and then die down into Christmas. Highly likely next week we see minimal volume even after Christmas going into the beginning of the year. Very, very possible. It's possible you don't see a real pickup on volume until the second week here in January. Giving you an idea, what happened last year? When did you, or this year, sorry. When did we find our bottom here on like Nasdaq? And I'm not saying it's going to happen exactly the same, so I don't want that to be, don't put me down for that. But again, that first week of January, we kind of found that bottom, but we saw a surge in buying, shortly after that second week. You have to understand this right here, this is holiday season right here. The same thing goes for Thanksgiving, right? Everyone's like, oh, well, Thanksgiving, why do we not see no volume? It's a holiday. July 4th. We see this all the time throughout the year. So just know that these are holidays and you're going to see a slowdown in buying. Typically happens, not a surprise. So those are things that you're looking for there. You also did start to see a little bit of a bounce here on something like DXY, right? And I think there's a few things that you're looking for across the board for risk on, risk off. It's very simple what we're looking for. Looking at the dollar, you're looking at yields, which again, Powell's comments, I think it's clear as day. We're going to go to that here in a second, have directly impacted yields and bonds directly. I think you've almost seen a separation, which I don't think lasts forever, between the dollar necessarily and yields, where yields and bonds are kind of front running and leading the dollar now. And it was kind of the other way around before. Okay. So the best things you're looking for risk on DXY, the dollar, yields and bonds, and then you're looking at any type of metric of, risky type assets, IWM, what's happening with Bitcoin potentially. Those are very good risk on metrics. And then you're also looking at a little bit further maybe at oil to get anticipation of what's happening with inflation potentially, because every time oil has risen, inflation has also risen as well. So those are things you're looking at right there. Okay. Those are the big bullet points if I had to point any out there. Okay. And so again, before we got this big run, I hate to even say it because some people are crazy and they're going to be like, Bitcoin leads the market. Does not. But Bitcoin did have an initial surge before the rest of the market did, right? Granted, they had some news with the ETF and things along those lines, but definitely a metric we want to keep our eye out on. Okay. I like to pull back the head here on Bitcoin. I think you have room into 47K still. So those are big things you're looking at here. Now, when we look at the dollar, again, you saw the dollar, like we'll go here on the daily. Decent bounce on Friday, right? Decent, not terrible. Go to yields, 10-year. Not that great, kind of rejected. The 30-year, closing almost at lows, right? So again, you're seeing that separation to where yields are definitely responding to the way the market is, what Fed Powell is, saying about the market. 100%. DXY is a little bit more back and forth, okay? But again, you started breaking all those major levels we talked about, the 2022 highs, the 200 SMA, those levels are broken now. We have a few chart prime indicators levels down here as well, right? But again, I don't think those are going to hold up necessarily. And then we start to get into the big question of, coming back down into, 3.5. What's happening on the 10-year? The 30-year coming back down to, 3.5 as well. These are big questions, and the reaction is going to give us big answers. So those are all things you're looking at here. Now, we go back into, some of these ETFs, and I really recommend, if you're looking at the overall strength of the market, you're trying to get a gauge of what's happening out there, don't necessarily look at specific stocks. Like Apple. Apple's a great stock to look at. I think it's a great stock to understand the strength maybe of this S&P, but sometimes things are going to be off on it, okay? I recommend looking at these ETFs, XLK, the major tech ETF, right? If you look here at XLK on the daily, it's probably your best looking chart across the whole market. Just being totally honest. It's absolutely, this is the daily going back to basically, all the way to 2020, right? Clear cut, beautiful breakout, retest previous highs multiple times, and you slingshot up. Perfect. Exactly what you wanted. So it's very important that we look at this and we say, okay, we can be unbiased with what we're looking at as well. Even though we may have a feeling of what's happening out there, that we can say, okay, well, ETF stocks are still going crazy. For instance, I look at Tesla. It's trying to break out. It looks really good. I like it. I like what's happening here. I look at Amazon. I like what's happening here. You're finally breaking out. But you're kind of consolidating here for a while. But I go look at XLY was just going up. From the beginning of November, you've been going straight up. It's been stair-steppy. It's been like gradual, but you've been going straight up. The underlying ETF has still remained very bullish. So it's important that we understand what we're looking at, and we're not just kind of getting tunnel vision on just one stock or one side of the market. We're able to identify everything that's happening. That's one thing that you need to be really consistent with right now. If you're looking at longer data trades and you're positioning yourself. Now, it's not me saying, okay, XOY looks great, so I'm going all in. This is it. You know, win, lose, draw. It is what it is, right? No, that's not what I'm doing here. I'm still making educated decisions. I'm still trimming positions as we get in profits, but I'm understanding that I don't need to try to grab, you know, the top to go short. People that keep trying to grab the tops keep losing money. I keep seeing it on Twitter. So I just want that to be very clear. Now, again, a little bit of a different video today. Hope you guys something out of it. If you have questions, comment down below. I'll see you guys tomorrow. Good luck trading. Should be a pretty fun week.